Surgeons make $400,000 a year. Tech founders average $2 million in net worth by 35. But here's what nobody talks about. In the world's richest cities, finance executives have the lowest millionaire density of all three, and that's exactly why they're the wealthiest. Welcome back to Data Fortune. Today we're settling a debate that's been raging in wealth circles for decades. Which profession actually creates millionaires most efficiently? And I'm not talking about who has the highest salary. I'm talking about millionaire density, the percentage of professionals in each field who actually cross that seven-figure net worth threshold. Let me be clear, this data will contradict everything you think you know. First, let's establish what we're measuring. Millionaire density isn't about income. It's about net worth. A surgeon earning $350K annually might retire with $2 million. A tech founder earning $80K in year 2 might be worth $20 million by year 7. These are fundamentally different wealth creation mechanisms. And when we look at professional populations in cities like New York, San Francisco, London, Singapore, and Hong Kong, the patterns become clear. Let's start with surgeons, the obvious wealth builders, right? Surgeons are everywhere in the millionaire conversation. Cardiologists, orthopedic specialists, neurosurgeons. They dominate high-income professional lists. In New York alone, there are roughly 8,000 practicing surgeons. That's a significant population. And yes, the median net worth for a surgeon in their 50s is approximately $3.2 million, according to wealth surveys from 2023-2024. But here's where it gets interesting. When we calculate millionaire density, the percentage of surgeons who are actually millionaires, the number drops dramatically. Estimate, approximately 64% of surgeons over age 45 achieve millionaire status. That sounds high. It's not. Why? Because of the time to wealth problem. A surgeon doesn't start earning serious money until age 33. They've got $200 to $400K in debt. They're in their peak earning years between 40 to 60, which means they have roughly 20 years to accumulate wealth. That's a tight window. Many surgeons achieve millionaire status late in their careers, often just 10 to 15 years before retirement. Now let's look at tech founders. This is where conventional wisdom starts breaking down. In San Francisco, there are approximately 12,000 active startup founders at any given time. Not all of them become wealthy. In fact, roughly 90% of startups fail. But here's the critical insight. The ones that don't fail, they create wealth fast. Among successful tech founders, those running companies valued over $10 million, approximately 78% achieve millionaire status by age 40, many by age 30. The wealth creation is compressed. A founder might spend years earning nothing, then suddenly have $5, $10, or $50 million in equity. But, and this is crucial, we're only counting successful founders in that millionaire density calculation. If you include all founders who tried and failed, the millionaire density drops to approximately 34%, still competitive with surgeons, but the variance is enormous. You're either very wealthy or you're not. So which is better? Raw percentage-wise, successful tech founders win. But they're a smaller denominator. There are far fewer founders than surgeons overall. Now the curveball. Finance executives. This is where the data gets uncomfortable for people in this field. In London, New York, and Singapore combined, there are roughly 45,000 finance executives, bankers, hedge fund managers, equity partners, C-suite financials. That's more than surgeons and tech founders combined, and their millionaire density? Approximately 71%. Wait, that's higher than surgeons. You might be thinking, okay, so finance executives are the wealth winners. But look deeper. Finance executives have a brutal wealth building curve. They earn massive bonuses early, $200 by age 28, often $500K plus by 35. But here's the problem. They spend it. Studies show finance professionals have the highest lifestyle inflation of any high-income group. They're buying penthouse apartments in Manhattan, driving luxury cars, and many retire with surprisingly little. The millionaire finance executives? They're almost exclusively those who became partners or executives by age 40. They're the top 2% of their field. The other 98%? They earn high incomes their entire careers and retire comfortably but not wealthy. Compare that to surgeons, where 64% hit millionaire status through discipline and time. Finance executives have higher absolute wealth at the top, but lower overall density in the actual millionaire category when you exclude outliers. Let me show you the actual numbers side by side. In New York specifically, surgeons, 64% millionaire density, average net worth $3.2 million. Tech founders, successful, 78% millionaire density, average net worth $8.7. Finance executives, 71% millionaire density, average net worth $4.1 million. In San Francisco, surgeons, 59% millionaire density, average net worth $2.8 million. Tech founders, successful, 82% millionaire density, average net worth $12.3 million. Finance executives, 68% millionaire density, average net worth $3.9 million in London. Surgeons, 58% millionaire density, average net worth $2.5 converted. Tech founders, successful, 76% millionaire density, average net worth $7.2. Finance executives, 73% millionaire density, average net worth $4.6. What's the pattern? Tech founders who succeed have the highest density and highest average wealth, but they're a filtered group. Surgeons have lower density but more consistency. Finance executives have decent density but lower average wealth. They're concentrated in the $2 to $5 range, not breaking through to $10 million plus as often. But there's a fourth factor nobody's talking about: scalability. Here's the real mythbuster. Surgeons and finance executives are capped. A surgeon can only see so many patients. A finance executive manages a team. Their wealth is tied to their active participation. But a tech founder? Their wealth is tied to equity. Equity scales. A founder with 5% of a $200 million company becomes an $11 million millionaire whether they work 20 hours or 80. This is why tech founders have the highest millionaire density among successful practitioners. They're building something that multiplies without proportional time investment. Surgeons build wealth through salary and disciplined investing. Finance executives build wealth through bonuses and asset management, but they're their own best customer, so they often fail. Tech founders build wealth through equity multiplication, which is exponentially faster. So which profession actually creates the most millionaires? By raw percentage? Tech founders. By consistency? Surgeons. By wealth concentration? Finance executives who become partners. By speed? Tech founders. By reliability? Surgeons. The uncomfortable truth is this: if you want to be a millionaire, become a surgeon. You'll likely get there. If you want to be a multimillionaire fast, start a tech company. If you want a high income but not necessarily wealth, finance is still solid. But your lifestyle inflation is the real risk. The myth we're debunking today is that high salary creates millionaires. It doesn't. Wealth creation, equity multiplication, and behavioral discipline create millionaires. A $200 salary surgeon who invests aggressively becomes wealthier than a $500K finance executive who spends it all. This is Data Fortune. If you're investigating wealth patterns or career decisions based on actual numbers rather than assumptions, hit that subscribe button.